Just how much is this jobs report going to really shape the story around rates? We're already seeing the rate cut story pushed off further and further into the new year.
Well, with such uncertainty about which way the world is headed, one report can really move markets substantially. And so that's why all eyes will be on this report for signs of what's happening with wage growth and whether it's inflationary. There, I'm expecting to see a pretty good read, 4.1% or so, decline in wage growth. And to see what's happening with job growth. And there, I expect we could get another big blockbuster of a number. I think the risk is very much to the upside on this one.
What's leading you to think that there could be upside risk to this number? And what exactly are you expecting from the number, with the consensus being 200,000 right now?
I think it's more likely to see a number like 250,000. Online job postings, the data that I look at most closely at ZipRecruiter, those have ticked upwards for 2 months now after a 20-month slide. The manufacturing PMI has been strong for 2 months following 17 months of weakness. Leading indicators for the economy are turning up now after 2 years of being in the red. And so there are lots of signs that we may actually be on the cusp of a bit of a labor market reheating.
This is interesting as well, because we've been highlighting a lot, and even today as well, about many of the job cuts that are happening in places like technology, media, and telecom. Is it, in your opinion, fair to say that those particular cuts that we've been reporting on for the better part of the last 6 to 9 months are not indicative of the broader economy, and that the broader economy is doing better than some of those tech headlines would suggest?
Absolutely. So number one, layoffs are incredibly low right now, actually. Overall, in the aggregate, the layoff rate is just 1% of workers being laid off or fired each month. That's way below the average in 2016, 2017, 2018, 2019 of 1.2%. And then when it comes to those tech fields in particular, there are sort of 6 different industries in Bureau of Labor Statistics data that are related to tech very closely. And those have actually stabilized in recent months, and they're starting to look like they're trending upwards again.
If they are trending upwards, I wonder, at ZipRecruiter, are you seeing signs on your side that the jobs market is getting stronger on a relative basis, staying still, or getting weaker?
So we're seeing things pretty much stabilize and flatline, but there are some signs of life, even in industries that were struggling previously. In retail, transportation, warehousing, manufacturing, we're seeing a little bit of a comeback.
Okay. And just to be clear, if you look at the way that your job postings are sorting out right now, is there a place where you are seeing a lot more of that activity pick up from your larger clients?
The big strength is still in those acyclical fields: healthcare, government, education. Tremendous demand still, especially in fields that are mostly in-person work. Workers are flocking to remote jobs, and so the employers who are seeking in-person workers are having to work that much harder.